So obviously Friktion has tapped into the options market, but at the same time, you guys are not really options specific. You guys are more like an asset portfolio management strategy, right? You don't care what strategy it is as long as it makes money. So what are your thoughts on where the industry is going in this regard?
So I think I'm quite bullish still the structured product space evolving in DeFi over the next couple of years. It's really only been 1.5 to 2 years at the longest since this kicked off. And since we launched, I mean, I think it's really accelerated the growth of options in DeFi. But one thing we focused on since the beginning is really having a strong liquidity network. So I think as DeFi matures, we're going to need to find these like uncorrelated sources of return, which each can sit in their own vault and allow users to compose on top of them. Users, protocols, really anyone who interacts with Friktion to compose on top of them to create kind of baskets or portfolios of their own.
Hello, everyone. My name is Ben, and as usual, I'm the host for today's podcast. Today, we have Uddhav Marwaha, one of the people from Friktion Labs. Welcome to the podcast.
Hey, man. Nice to be here. Nice to meet you. Excited to talk a little about Friktion.
Yeah, so before we get started, I always like to ask all our speakers, how did you get started in crypto?
Yeah, the first thing that got me interested in crypto was around December 2017, early 2018, when I was a sophomore in university. I had some friends who were building on Ethereum and EOS at the time in Austin. And then they kind of red pilled me to start reading white papers, got super into it. And then I was fortunate enough to watch the Uniswap V1 launch in November of 2018, which was quite exciting. And then since then, I at that point, I was a college student studying petroleum engineering and math. So I wasn't super crypto pilled at the time. Then I graduated from university, went to commodities trading in Chicago for 2 years. So not crypto trading, unfortunately, probably would have been a better thing to go to at that point. Ended up working on commodities like gasoline, crude oil, bean oil, and more energy focused. And then more recently, about a year ago, right as DeFi summer was kicking off, I decided to spend way more time on crypto and DeFi and day to day. So did a lot of farming, lending, essentially trading on a bunch of new L1s that were popping up, and then started to systemize things as I got reconnected with my co-founder, Alex, who I met in college, also through this quant trading group. And since then, in October of last year, we decided to build out Friktion in V0 and a hackathon. And since then, our goal has really been to bring full stack portfolio management into DeFi. And by this, what I mean is we want to have strategies, or known as vaults, that anyone can use to earn returns that aren't inflationary or aren't based on interest rates across a variety of market cycles. So that's what got me here.
Yeah. So, I mean, you kind of jumped ahead of the curve, right? So like you said, Friktion Protocol is a portfolio asset management strategy protocol. And you have a bunch of strategies called vaults. So yeah, could you explain what kind of portfolio strategies do you offer?
Yeah. So as an overview of Friktion, as you said, we're building portfolio management strategies, meaning each vault, also known as a structured product, is meant to serve its role as a building block of any DeFi portfolio that you build. And if you built a portfolio, or you've had crypto assets through DeFi summer, or even in the last year, even in the last week, being recorded on May 9th here, you've seen them go through quite a highs and lows in terms of prices. And one key focus for us is each vault has a very specific payoff, and rather can be summarized by a specific risk reward profile, meaning you sell upside in the first vault through a covered call overriding strategy. You sell downside volatility in the second vault through a put override strategy secured by underlying cash assets. And in the third vault, you take a delta neutral volatility harvesting view. So you're also short volatility, but you're collecting the funding rate from a power 2 perpetual. So in the case of the first asset, BTC squared, Essentially what you're doing is you're putting on a short BTC squared position that's delta hedged with underlying BTC perps. And this rebalances on a weekly basis. So you can collect a yield by betting that BTC will stay in a range. We call it the profit range. And you can explore this in kind of more detail on the UI. And then our fourth vault is a basis yield strategy. So it allows anyone to participate in long and soon to be short basis positions that allow you to earn the premium or the basis between spot and perpetuals, and soon spot and exploratory futures when they do launch. Currently, we're Solana based, so we expect to be using a lot of the DEXs on Solana. But as we connect to more institutional liquidity networks, we want to expand the underlying exchanges we interact with to be a lot broader and really scalable that way.
Right, so what I like about this as well, because for most retail traders, right, this kind of financial terms and financial instruments can be very complex. And from what you've described, it kind of abstracts away that complexity and allows players to just pick their strategies, right? So it's as simple as, okay, I'm down for Vault 2. I'm going to do this on BTC. I don't need to worry about all the underlying stuff, right? I just need to know roughly what happens. Is that correct?
Yeah, one way we like to think about this is we'll eventually be adding this into the UI as well. But if a user comes to the protocol, they generally come with a couple of things. One, maybe a market view. One, maybe a certain amount of assets. And then duration they're looking to deploy these assets in. And additionally, some more sophisticated users may have risk tolerances that they would want to respect. So they want to carefully hedge those positions as well. But for someone coming in with the market view, let's say you're going to have three things, right? You can be a bull, you can be a bear, you can have a flat or a crab view that the market stays range bound for a while. And then you can have a wide variety of assets. Right now, Friktion has the deepest liquidity and kind of the widest array of assets when it comes to the option markets that we support. So it tends to be the best pricing for a lot of these venues or largest traders of SOL options and BTC options on a weekly basis. And only 3 of, I think, the 25 assets that we have listed are on centralized venues in terms of the option markets. So as a new person who comes to Friktion, we definitely would encourage everyone to explore some of the learning tools that we've embedded into the dApp. If you come into the first Vault, for example, you're kind of aided by a pretty deep dive video into how does the P&L scenarios of the strategy of the Vault 1 work. In this, you can kind of observe the scenarios in which the option expires in the money, out of the money, or near the money. And this gives you the opportunity to figure out kind of what are your payoff scenarios, what are the risks you're taking on in order to earn this yield. I think one challenge we've seen in DeFi is when people abstract away things, there's a fine line between abstracting and kind of hiding risks. One thing we're really kind of for in Friktion is to be extremely transparent about this, which is why we built out our analytics page. You can also check out the analytics page on the dApp, just app.friction.fi/analytics. It has pretty great insights into the performance, the risks, and a bunch of data around the trading details for each asset and each vault, which should really open up the idea of kind of transparency and risk analysis for anyone who's a new user of Friktion or maybe completely new to DeFi. We want to make it such that the experience rivals the CeFi alternatives that you may currently be using in order to earn yield on your crypto assets or your stables or whatever it may be. And alongside that, we've put a lot of work into kind of having a documentation to accompany every vault. And we spend a bunch of time doing research as well on both auction execution as well as just protocol design. So you can check that out at our blog as well.
So I'm just going to throw a ballpark question here, because initially you guys talk a lot about all these strategies, and from what I can tell, it's obviously left up to the user to pick. Will you ever graduate to a point where you advise users, which is the best strategy now for this current market conditions? Any thoughts on that?
Yeah, great question. I think a lot of users have been asking about some sort of recommendation engine, the same way you may have a robo-advisor in the traditional world, who you're used to saying, well, these are my parameters, input in my risk, my reward, my liquidity, and any other additional sensitivities that you may have as a investor or trader or whatever it is, and what can the protocol output. So right now, one thing we're working on behind the scenes is this generic rebalancing protocol as well, which would essentially take in these risk outputs, perform back testing, stress testing, essentially risk analysis to say, how would this strategy have performed over some period of time, given the parameters that you input, and output the weightings of various vaults, which is why it's so exciting for us to launch vaults that are uncorrelated. I think it's something that you don't see a lot in DeFi is most strategies tend to be highly correlated to each other. And we've seen this more recently with the NASDAQ BTC, NASDAQ ETH correlation is quite high. And a lot of the market moving in the same direction when large moves are happening. So as we add more diversified vaults, moving beyond short volatility to more basis and long volatility strategies, I think it'll make a lot more sense for us to work on kind of this allocator type protocol beneath the engine.
Yeah, I mean, ultimately, you're going to build a lot of data points as well, right? There might be relationships that you never thought would have existed, but with the kind of protocol you're building, I mean, you could devise completely new strategies that are unheard of anywhere else.
Yeah, I think that's a big goal. Yeah, like you said.
Yeah, I mean, it's really cool, right? And I think this is one of the only things possible on DeFi.
Yeah, I totally agree. It's almost impossible to compose any of these things. Like power perps, much less perps, can exist in the traditional market. It can't exist in the traditional market or haven't for a long time. So I think it's our job to kind of continue to innovate new products that people can use.
So, I mean, that's, this kind of explains why the team has kind of, started off with option strategies, but now kind of moved on to other strategies. Could you elaborate on why the decision was made in terms of, and kind of share about which strategies do you prefer?
Great question. So as you mentioned, when we first launched the protocol, we had Volt 1, which was the covered call, and Volt 2, which was the put override. And at that point, we were just supporting BTC, ETH, and Sol. And now we've added about 20 assets to that mix. I think about 4 or 5 stable coins or stablecoin derivatives that we're supporting on the protocol. And I think a big focus for us has been really proving that we can scale in the not just the nonlinear market with options, but also with new strategies that may give users different payoffs. I think one thing that we're seeing is in DeFi or in crypto generally, like the best trades tend to quickly get concentrated or saturated with a lot of new users. Rather, the newest farms, you see high APYs and you ape into these farms, and then the yield kind of decays by definition. So we wanted to find strategies that could scale to $1 billion in each vault, or even $10 million in each vault, that didn't rely on emissions or inflation or any concept of like interest rates that are driving this, which take on a little bit of variable risk versus these like discrete payoffs that we identified in the first two. So as you said, the first two were option based, and we saw that there's a clear demand in mild bull markets or even slightly bearish markets to collect some yield on your underlying asset with a call override. And there was a lot of demand in bull markets to earn on top of your stables. And this is additionally earning stables on top of stables in order to, while you're doing a put override strategy. But we wanted to add more to our basket because, as we mentioned earlier, I think the biggest value prop of Friktion in 1 or 2 years is going to be the diversification of vaults. Meaning if the market is down only for 6 weeks, 6 months, there should be a strategy on Friktion you can use to monetize that. And it shouldn't just be options related. I think it could take advantage of funding rate arbitrages between exchanges. It can take advantage of a fixed income market where maybe rates are going up. So we're definitely seeking to expand the suite of vaults into the credit space most shortly, and eventually into a very interesting combination of long vol products that you can use to hedge while market moves in really any direction.
Yeah. So one of the issues that I've commonly seen in DeFi is that there are not a lot of sophisticated traders who leverage these kinds of instruments. Like you say, I think most of them will ape into some unsustainable APY shitcoin. And so my question is this true in your opinion, first of all? And if so, how do we bridge the gap?
Yeah, this is a really good question. So I think if you'd asked me during DeFi summer, I think most of the people onboarding had never touched crypto before. They had some ETH on centralized exchanges and they moved it over to the chain and then started playing around with various dApps on the L1, started farming, moved it across various EVM compatible chains. And it was a great opportunity as the market all ran up in tandem, triggered by the launch of Compound or Compound token launch. I think what's changing now is as the DeFi market is maturing, we're bringing in people who whose first idea of earning may not come from DeFi native backgrounds. They're definitely coming from more consumer fintech applications or places by which they're used to directly only interacting with their bank, let's say, in order to find earn opportunities on their underlying assets, which are almost always fiat. So to engage this user, I think one thing that we need to do really well and we spend a lot of time on is designing a user experience that is very easy to navigate, not too intimidating, and also educates. I think the education piece is most key, because as a new user comes in, or at least even if a new user came into any application, whether it's crypto native or not crypto native, they need to be able to answer a couple of base questions about what they're looking at and what they're digesting. So part of our job is just to spend a lot of time building out a smooth UX, less than 5 clicks to deposit, enough material on the DApp to redirect you to if you're curious about the strategy, and then continuous support if you have questions in our Discord, where we're always around. So
yeah, sounds amazing. And you mentioned that a lot of people started off on Ethereum and other EVM compatible chains, but Friktion is actually on Solana. So any reasons why you picked Solana?
Yeah. I mean, as you said, like I started off on Ethereum, spent some time farming. Alex, my co-founder, spent some time on AVAX, BSC, Polygon, and we both got attracted to Solana probably like January of last year, where some of our friends started building on Solana and started getting involved in some hackathons there. And then coming from a trading perspective, we saw Solana looked a lot like the high frequency trading systems that you interact with in traditional finance roles, trading roles, particularly from the system design and how the C-level runtime differed from the Ethereum virtual machine. I think it was quite interesting to really understand the account-based structure rather than really how Ethereum is designed. It's a fresh approach. It's something that's young, still needs to be fully proven out. But it really attracted us because we could think about it a lot like we would think about maybe HFT systems. So one first thing was it was quite engaging in that sense. The community was growing rapidly. I mean, DeFi TVL on Solana hit like I think 8 to 10 billion as we were launching Friktion in December. And obviously the entire ecosystem DeFi wise has cooled down across chains since then. But yeah, we just saw it as a fantastic place to build. The community was growing. And we thought that it would really have a strong presence and still do as a trading chain, as a chain that would really attract traders, particularly because the existence and the continuous development of Project Serum on Solana, which is an order book based generalized DEX that you can use for any program that you're building on Solana. So we have a lot of our core infrastructure relies and utilizes Serum, Serum's order books in order to create like markets for all the Friktion products. And there's multiple layers on top of that, but the underlying core Serum was quite a valuable innovation that I don't think a lot of other chains have cracked yet in terms of creating order books.
I mean, yeah, I completely agree, right? I think I myself, when I was on Solana, I still am. Serum is usually the call for everything that we do. And yeah, it's no surprise that that's one of the main reasons why you've built on there. Okay, so, we talked a lot about all these strategies and stuff that Friktion is doing, but there is this larger overview, right, about where the market's heading. So obviously Friktion has tapped into the options market, but at the same time, you guys are not really options specific. You guys are more like an asset portfolio management strategy, right? You don't care what strategy it is as long as it makes money. So what are your thoughts on where the industry is going in this regard?
Yeah, so I think I'm quite bullish still the structured product space evolving in DeFi over the next couple of years. It's really only been 1.5 to 2 years at the longest since this kicked off, and since we launched, I mean, I think it's really accelerated the growth of options in DeFi as one vertical. But as you mentioned, there's many other ways to earn yield that aren't driven by traditional sources. So maybe to recap real quick, how do people earn yield in DeFi? So there's lending, there's AMMs where you can provide liquidity into. There's staking to validate networks and earn rewards. Then there's derivatives arbs, which could be the cash and carry like we offer with the basis strategy in Bolt 4. And then there's volatility, which is what we offer with the first and second Bolt and the third Bolt on the short side. So I think as DeFi matures, we're going to need to find these like uncorrelated sources of return, which each can sit in their own vault, and allow users to compose on top of them. Users, protocols, really anyone who interacts with Friktion to compose on top of them to create kind of baskets or portfolios of their own that will create an interesting layer on top of that. I think I haven't seen a lot of folks kind of take the approach of building these portfolio strategy Legos. It tends to be a lot of development on the infrastructure layer. But one thing we focused on since the beginning is really having a strong liquidity network, as in strong demand and supply for the markets that we do create. I think there's something that will be needed in DeFi as liquidity gets fragmented across so many chains and protocols. So one focus for us has been really like doubling down on these sources of return. And as you said, there are many ways, and there's a lot of development of the asset management space broadly in DeFi. But in order for this to take off, I think we need to see protocols, or we need to spend a lot of time ourselves exploring these new sources of returns. Like how can you hedge a portfolio that's traditionally majority long beta short vol? Well, you can use some combination of a long vol instrument. Well, on Ethereum, for example, I think one of the closest proxies to that is something like Squeeze or the flexible leverage index, which gives you this token that essentially gets you 2x levered ETH. But I think there's some really exciting ways we can design a more capitally efficient version of that, taking advantage of some of Solana's properties, which let any active traders come in and purchase this insurance / a hedge product at open times, while also having a fixed income component of their portfolio through an institutional credit product that we're working on. So I think that, the solution for me in the asset management world is just providing diversification of strategies.
Yeah, just some thoughts. I think, the tokenized use space is picking up quite a lot of traction. I'm not sure whether Friktion is already exploring that. Tokenized future you, I mean.
Yeah, I mean, as you say, the interest rate market. So there's a growth of interest rate swaps that we're seeing as it became a really growing market on Ethereum, the L1. We're seeing, as you said, fixed versus variable protocols, and that tokenize your ownership tokens or O tokens and Y tokens. I think Pendle kicked off some of that stuff, which is fantastic. I mean, that was one of the first projects that I really dive deep on, and it's in the Discord back the day before launch and stuff. It was quite exciting. But I think the interest rate derivative space hasn't built a ton of growth beyond just these two things. Like I think the market for interest rate options is probably something that's still quite young and to be developed. I mean, we have like 1 to 50 trillion of equivalent market sitting in the traditional financial world that has to find a better place, I think, in DeFi, and we have to build products that can outperform. So definitely a lot of room to grow.
Right. Just some thoughts for my audience, right? We generally like to ask, when token, what token?
Yeah,
Friktion have
great
one?
question. Yeah, so I mean, right now the first incentives we gave our users were called the Lightning OG NFT collection. So if you're not on the Friktion Discord lurking around, definitely encourage you hop in there and try to find get your hands on a Lightning OG. You could also just go to Magic Eden and check out the collection there. But that collection gives users access to one of the first forms of incentives that we brought to our community, which essentially unlocked launches of new assets, new products, and also got really close access to some of the projects that we were working on and had a lot of influence in future vaults. So the OG collection is quite important to us, as it was given to actually early power DevNet users who had no economic incentive and really were testing the protocol to find bugs, fixes, and any developments and any ideas that they could. So I think when it comes to token, the goal of Friktion Token is to distribute it to also our power users. And this is something that we've thought about a lot. We also recently launched this program called Circuits, which is a DAO to DAO portfolio management service. It essentially allows protocols, whether they're fully on-chain or traditional asset managers, to access custom Friktion strategies that fit their risk parameters. I think this is a challenging product in turbulent market conditions like this. So, which is another incentive why we wanted to expand the offering of the vaults that we have, so that these DAOs could have real treasury management strategies that can perform across market cycles. And when they do this, it's in sort of an algorithmic less discretionary way, then we may see a lot of treasuries do it, given I think majority of treasuries or treasury volume on ETH, which was hit somewhere between 15 and 20 billion and maybe closer to 1.5 billion on Solana, are largely dominated in native token. So we want to grow the circuits part of Friktion a ton over the next year. So for protocols and DAOs, whether they're on Solana, Ethereum, Avalanche, we're definitely keen to learn about how we can help with treasury management, especially with some of the testing and modeling around it. And we think we want to incentivize these large contributors. We think the way there's tokenomics have been designed at places like Tokamak, Yearn, and then a lot of the kind of OG Ethereum projects are quite interesting ways to reward early users. But we also want to keep growing the protocols and people that participate in Friktion. So yeah, definitely use the NFT and engage with the protocol for highest EV in the long term.
Yeah. So you raised an interesting point. Well, interesting for me because you talked about NFTs as well and how Friktion has their own OG NFTs, that kind of thing. Obviously, everyone's aware of the NFT space right now. Do you think there are any opportunities where Friktion can tap into the NFT / DeFi crossover? I know today, for example, JPEG, one of the Ethereum NFT DeFi protocols, just liquidated 10 punks, 10 crypto punks. Yeah. So it's quite interesting. I'm not sure whether you guys are exploring that sector as well.
Yeah, I mean, NFTs, I think one of the most exciting areas where NFTs meet DeFi is when you create like real financial utilities. So for example, one of the benefits that NFT holders will be getting soon is they'll be able to switch seamlessly between vaults without any fee or without any kind of negative response from the protocol. They'll also be able to access our newest strategies first, which we want to build. I think like one of the core tenets of NFTs is they provide some communal value that maybe non-NFT holders don't get, right? So simply as beyond just being an artifact or a JPEG, I think we want to create a community around this that really is like Friktion power users. So we want to reward them for being the early power users by giving them access to our newest products. And then we'll be doing our first IRL meetup for Friktion OG holders officially probably around June in Singapore, actually. So really looking forward to meeting up with a lot of the OG holders. We were actually at the Crypto Bahamas conference recently, and we ran into a huge Friktion power user who also had a couple NFTs. And it was fantastic to hear their feedback in response about the protocol, what we could do better. So I think our plan is to definitely continue to try to find ways to really empower the NFT holders with new utilities and new access. And then more on the financial product side, I think there is a pretty interesting space with a lot of the interesting derivatives that Paradigm had written up on. So from floor perps to RICs to kind of various instruments that I think NFTs will eventually gain enough liquidity for. I think one first problem we have to solve is like kind of liquid order book based markets for NFTs or even successful AMMs. We've seen the rise of the aggregators like Gem and Genie on Ethereum. So I think there's a lot of cool things coming beyond the PFP side of NFTs.
Yeah. I mean, it's because I'm myself an NFT person, so I just wanted to ask, and it's great that you mentioned that because, like you said, the biggest problem in NFTs is liquidity, and once that's solved, there'll be a lot of cool things you can do with it.
Yeah, pretty fun problem for those who are working on it, for sure.
Yeah. So, last question. Well, not really a question, more like, is there anything that I should have asked that you wanted to talk about, or tell me something I don't know but I should know about today's discussion?
Yeah, I mean, we talked about this a little bit in the beginning, but our goal really is to build like full stack portfolio management. So whether you're a new DeFi user, you've never touched crypto before, or this is your 10th protocol that you've interacted with, we want to have strategies that fit your place on the DeFi efficient frontier. What this means is for users who are really looking to get involved in an ecosystem that has kind of all of these strategies, we want to be that homepage in that sense. But we also want protocols to build strategies on top of Friktion. We're seeing protocols like Investin on Solana do some of this in really exciting challenges that they kind of face as we're building out some of these things. And then we're also spending a lot of time on some of our growth initiatives right now. So as I mentioned earlier, for DAO treasuries and institutions that are looking to onboard into crypto. We're building out permission vaults, essentially learning from kind of the Compound Treasury and Aave Pro developments. I think these strategies, given how much of the Friktion assets don't actually trade on really any other venues in a liquid form, open up a lot of opportunity for maybe like long-term risk-adjusted yields. Really core focus of the protocol is that. And then, I think our focus for the next year really is on some of those growth initiatives, education, as we talked about earlier, and then finally scaling our team. So we started as a team of really 3 post hackathon in October, and now we're a team of about 7. We're looking to grow on kind of the smart contract engineering, Rust-based front-end engineers to help us improve and scale out the UI to more vaults. People who are familiar with institutional products to join our institutional side, and then always great writers. I think the DeFi community connects with normal users through high quality content and well explained as well. So anyone who's interested in kind of diving into DeFi for the first time, we're really always open, and really looking forward to launching a couple more vaults here in the next month.
Yeah, I mean, that pretty much rounds up the session, right? You kind of cover all the bases. I kind of want to ask as well, and you kind of cover it. Is there anything else you'd like to share with our audience? Maybe where they can contact your team, or if they want to learn more?
Sure, yeah, definitely encourage everyone to check out the Friktion app at app.friktion.fi. Again, Friktion with a K. They have 4 vaults live that you can use, and if you have any questions, you can always find us on Discord at discord.gg/Friktion, or on Twitter at Friktion_Labs with the K again. But I really appreciate you having me on, and looking forward to any more questions from your community.
Yeah, no problem. Thank you so much, Uddhav, for coming. And it's a great session. Take care.
Cheers.
For the latest crypto prices, visit our website. If you haven't already, make sure to subscribe to our YouTube channel to keep up to date on the latest crypto trends.